Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US. It was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. The financial sector is approaching a significant transformation, propelled by the substantial growth opportunities presented by digital assets. The current valuation of this asset class stands at around $3 trillion, with projections indicating a potential increase to $100 trillion over the next 10 years. The anticipated exponential growth necessitates a substantial influx of capital, attracting both institutional and retail investors on a global scale. Although this market shows significant potential, it remains in the early stages of development, having achieved only approximately 3% of its expected growth. This positions it as one of the most transformative opportunities in contemporary finance. Prominent macro investor Raoul Pal highlights the significant opportunities present in digital assets, especially cryptocurrencies such as Bitcoin. In response to apprehensions regarding the timing of investment, Pal contends that should Bitcoin attain the $100,000 mark, a notable benchmark, it would still constitute merely a small portion of its overall growth potential. The analysis indicates a possible 30-fold increase in valuations, with more conservative estimates suggesting a growth of 15 times. The assessment underscores the exceptional potential that digital assets present for wealth generation, significantly surpassing conventional investment options such as stocks, bonds, or real estate. The expansion of this market is supported by multiple critical elements. The trend of institutional adoption is on the rise, driven by regulatory clarity that is facilitating greater capital allocation from pension funds, hedge funds, and corporate treasuries into the cryptocurrency market. The advancements in blockchain technology and decentralized finance, DeFi, are facilitating the emergence of new applications, enhancing user adoption, and generating incremental value. Current macroeconomic trends, including increasing inflation and uncertainty surrounding monetary policy, are driving investors to seek assets that are viewed as protective measures against the devaluation of fiat currencies. The expansion of financial markets through cryptocurrencies facilitates seamless transactions across borders and enhances financial inclusion, especially in emerging economies where conventional financial infrastructures are lacking. The present market conditions present a unique opportunity for investors that may not be seen again for a long time. Despite the presence of risks, including regulatory changes, market volatility, and technological challenges, the asymmetric reward potential associated with this asset class positions it as a compelling option for enhancing a diversified portfolio. And lots of things Raoul Pal discusses, so please watch the video. To end and share this video, and subscribe our channel Everyday Finance. Thanks.
So Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The big volatile drawdowns are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward looking, so it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is it shouldn't last that long in price or time. And then we've got liquidity all the way through this cycle. Now, if we go back to 2021, the prior post-election cycle, because the pandemic had seen the global economy go down to zero, then go straight back up again, the business cycle peaked really early in April 2021. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US. It was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year on all risk assets.
On January 18th, 2025, the cryptocurrency market reached a notable milestone with the introduction of the official TMP meme coin on the Solana blockchain. In a remarkable 24-hour period, the token experienced a substantial increase of over 490%, achieving a trading volume close to $10 billion and positioning itself within the top 30 cryptocurrencies based on market capitalization. Former President Donald Trump made an announcement regarding the coin on his official Truth Social and X accounts, which triggered an immediate surge in trading activity. TMP reached a market capitalization high of $8 billion before settling at $5.7 billion. The current share price stands at $28, indicating a fully diluted market cap of $28.5 billion. The TMP launch triggered a significant increase in engagement within the Solana ecosystem, propelling its native token, SOL, to reach an all-time high of $270. The token's value relative to Ethereum has achieved record highs, underscoring Solana's increasing prominence and its ability to manage substantial trading volumes. This transition highlights the growing momentum of Solana-based projects as credible options to Ethereum, especially in fast-paced trading environments. Despite its remarkable initial performance, TMP has encountered its share of controversies. Analysis reveals that a significant 80% of the token supply is concentrated in one wallet, which raises critical concerns regarding decentralization and the potential for market manipulation. Moreover, the connection to Donald Trump's atypical business endeavors has generated doubt among investors and market analysts. Nonetheless, it is estimated that Trump's net worth may have increased by $2.2 billion due to his presumed stake in TMP, potentially multiplying his wealth significantly. The TMP launch highlighted Solana's ability to effectively handle substantial trading volumes, thereby solidifying its status as a scalable blockchain platform. The recent success could potentially draw additional projects and liquidity to Solana, thereby reinforcing its competitive position relative to Ethereum. TMP's swift ascent illustrates the volatile characteristics of meme coins, frequently merging speculative allure with considerable risks. Although they have the potential to yield significant short-term profits, the viability of their long-term sustainability is still in question. The accumulation of TMP tokens within a single wallet, especially when linked to a prominent individual, could potentially attract scrutiny from regulatory bodies. This is particularly relevant in the context of transparency, market integrity, and safeguarding investor interests. TMP's success underscores the persistent demand for innovative and prominent crypto initiatives, which may catalyze broader interest in blockchain technology and digital assets. The TMP launch signifies a critical juncture in the development of memecoins and blockchain ecosystems such as Solana. The future of TMP as a viable asset, or its decline into a speculative trend, hinges on its capacity to tackle decentralization issues and provide concrete value that extends beyond the initial excitement. The current event highlights the volatile and ever-changing characteristics of the cryptocurrency market, where advancements and speculative activities frequently coexist. Let's back to the Raoul Pal interview.
I don't think it goes down 25% because there's ETFs and the market is more mature. So let's say let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones.
Do you have any views on gold?
Look, gold is driven by the same thing, which is debasement of currency. It just doesn't have a tech adoption curve, so it doesn't go up as much. So gold will, considering, again, we're in the liquidity cycle where you have to debase currency to pay your debts, gold should continue to do well. Yeah, I'm bullish gold. And I think that'll continue to do well for the rest of this market, particularly, when the dollar starts falling as well, that's good for gold. So overall, I think it's a very good market for gold, very good market for most risk assets.
The recent increase in Bitcoin's value beyond the $100,000 threshold has prompted a notable uptick in transactions from previously inactive wallets, with some remaining untouched since the inception of the cryptocurrency. Bitcoin has sustained six-figure valuations for more than 48 hours, prompting activity from legacy addresses that had been dormant for years. The recent fluctuations underscore the significant appreciation of Bitcoin and its potential to maintain and enhance wealth over the long term. Over the weekend, Bitcoin experienced trading fluctuations within the range of $112,214 to $114,839, which has led to increased engagement from long-standing wallets. A wallet established in April 2015 has executed its inaugural transaction in almost 10 years, transferring 77.99 Bitcoin, which is currently valued at over $8 million. In a comparable instance, a wallet from 2014 executed a transfer of 39.7 Bitcoin, while an address from 2017 facilitated a significant transaction of 147 Bitcoin, equating to a value of $15.2 million. The most substantial individual transaction came from a wallet established in 2016, transferring 277.72 Bitcoin, currently appraised at $26.8 million. The recent fluctuations have highlighted the actions of long-term investors. It appears that a portion of the transferred funds is directed towards exchanges, likely for liquidation purposes, while additional amounts are being redistributed among various wallets. The reasons for these transactions are largely conjectural, encompassing factors such as profit realization, portfolio diversification, or reallocating capital into alternative investments. This activity highlights the potential of Bitcoin as a significant asset with the ability to generate substantial wealth for early investors. The reactivation of legacy wallets highlights significant milestones in Bitcoin's historical trajectory. A significant number of these addresses were created when Bitcoin's valuation was considerably lower than it is today, highlighting the remarkable appreciation of the cryptocurrency over the last 10 years. The recent transactions suggest a potential shift in market dynamics as the reintroduction of previously dormant Bitcoin enhances liquidity and could influence market sentiment. Experts are carefully observing these trends, as heightened activity from inactive wallets frequently indicates substantial shifts in the market. The psychological threshold of $100,000 has solidified Bitcoin's status as a leading store of value, drawing attention from both institutional and retail investors. Nonetheless, the divestiture of substantial positions may lead to immediate fluctuations in the market, necessitating a prudent approach from investors. In the future, Bitcoin's ability to maintain a six-figure valuation and the resurgence of legacy wallets underscore its distinctive position within the financial landscape. Bitcoin, characterized by its decentralized nature and limited supply, remains a focal point for investors, showcasing its potential as a vehicle for wealth preservation and growth over extended periods. These developments could enhance Bitcoin's attractiveness as a safeguard against inflation and an essential element of diversified investment strategies. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.